Alright, what's up guys? Welcome back here for another recap video. Today finishing up about $1,034.30. So pretty decent day. Made most of everything on VTYX, which was very nice out of the market open. During my pre-market watch list live stream, I was looking at MOTS since it was making the biggest move, was consolidating near the highs. But I tried catching a dip down in here. But we could not hold up, cutting it for break even, and then looks like it just completely sold off. So from there, I was just kind of looking at the next stock that had volume that was popping up and making a move. And the next stock that I saw was VTYX, and this one I was getting. I was very actually conservative in the beginning of part of the move because I was unsure if this would be the one. So I did trade sort of small size in the first trade, only 200 shares at 434. And then once we started to open up a little bit, I did increase my share size up to 1,000 lots, 1,000 share increments, up to 2,000 share increments. And my largest position on this was 4,000 shares. I'd say around on a price of $5, so about $20,000 position size. So very great position size. But I didn't really have any sort of outsized winner. Just a lot of small gains kind of adding up into $1,000 gain about. I didn't really have any sort of outside winner, so I feel like I could have done a lot better on VTYX. I had one trade out of the halt resumption in this area that I had a 37-cent trade at around $5. I think right here. Oh, sorry, 640. Yeah, 640, $6.40. I had a 35-cent trade here, but I was only trading 500 shares. I thought we were so extended, and I don't know. I don't know what I was thinking, only trading 500 shares. If I would have kept my 2,000 shares, could have been a nice $600 winner. Could be up, $1,500, $1,600 right now, but that, I was concerned about the risk because we've already made such a strong move off the low, and we were opening lower on the resumption. So I guess because of that, yeah, I understand why in that situation I did size down, because we did have a very strong move from $4 or $3.95 all the way up to 2 with only one minute pullback, all the way up to $6.50. That's a crazy move with only one minute pullback. Coming into a halt and it's starting a lower resumption, I understand in that situation why I did size down. But looking at hindsight, that was a 35-cent trade. But, it is what it is. Then I knew we were getting near the highs in here, so I was kind of keeping that share size a little bit smaller because ideally when you're trading, you want to, keep your share size on the strongest part of the move. And then as it's extending into the upside move, you want to progressively lower your share size so you're having minimal risk at the time of the stock where it's more likely the stock will roll over. Here, since we're in the beginning of the move, we're less likely to roll over versus right here. Because right here you're going to be up 83, 89% with only one red candle on the 1 minute. One minute pullback, 1 minute bull flag. That's pretty extended. And the last thing you want is to be doing small size here, and then finally, after having all this confirmation bias of good trade, you size up on this next pullback here at 68 and get flushed on. I've done that many times, but ideally, you want to, take maybe 1 or 2 feeler trades and then try to size up as soon as possible, risking, either small red or break even, keeping losses tight. And then if you start to connect, keep that share size or even increase it more. But, once you start trading for a while and it's, extended on it, made most of its move, let's say it's hard to tell, but let's say, you're already up like 100%, like in this case, maybe start to take a little bit smaller size up in this area because the chances of it rolling over are much higher. The backside, this is also a large float ticker, so you did need to give it a little bit more patience, which I didn't really have. I was able to get some small gains, but I didn't really allow for the stock to really extend itself to capture a bigger portion of the move. And then I knew on the backside, large float tickers on the backside, I am atrocious on. They don't seem to be having that springboard effect at the lower ends of the candle, on the red candle. So, that's where I usually make bulk of my profits, on the backside, scalping backside at the low ends of the candles. And a lot of the times, with large float tickers, you do not get that springboard effect that we usually see on small cap stocks because the supply is so large. And because the supply is so large, it takes a lot longer for the price to reverse. In a small cap stock, it may dip and then rip straight back up, even on a backside move. In a larger float, it might come down, close, come down lower, come down, close, come down lower, and then maybe take a candle, maybe a small bump, and then maybe start to do the reversal, but it's a lot slower. So, knowing that, I pretty much only traded like 100 shares, 200 shares on the backside. I think I gave back a decent bit. I gave back I had to have given back like 100, 150 bucks off the top on VTYX on small size. So thanks God it did have small size, because if it was 2,000 shares, I would have been back to flat. And there were some people who went back to flat on VTYX, and it was trading backside. And I knew it. I've been down this road so many times. I've seen stuff, price action like this on larger float tickers, enough to know that the backside on large float tickers are not where I'm going to be making the money. Large float tickers, you tend to want to ride the current, float with the current and let it push you, let it push up a little bit, give it a little bit more patience on the front side, and allow the movement of the stock to really start to unfold, because you may get a delayed effect on the breakouts. A lot of times you'll hold, like in this case, we're holding higher and moving higher, holding higher, moving higher. We weren't getting a lot of false breakouts, a lot of whippy false breakouts that you'd like to see, that we would see in small cap stocks that sometimes we don't like to see. But yeah, sometimes large float tickers move a little bit different. You gotta be a little bit more patient. Sometimes they can be a little bit more cleaner. In this case, I thought VTYX is pretty clean. Wasn't very whippy. The level 2 was pretty clean. The tape was pretty clean. So pretty much, I think for me it was easy to read on the front side. But again, the back side, got to be careful. Since it's not a small float, scalping the back sides can be very, very difficult. Especially if you're doing that hyper scalping strategy. So that was VTYX. We also had CPOP, which made a move midday. I didn't trade it midday. We had like a halt up, we had a pop and then a halt up, and then looks like we resumed and ripped up higher. This is tough action too. It looks pretty tough action. Then we had a massive dump here from 967 down to 831. That's a $1.50 share dump. Man, that's crazy. I didn't trade any of this. CPOP has not been nice to me. Has been a little bit larger spreads. Not really holding highs too well. A lot of topping tails. Seems to move fast, but the backsides are nasty. Look at these flushes. But I didn't trade CPOP. I'm not really looking to trade this going forward. It's just very, very choppy, especially near the highs. We might see some continuation move, maybe through 10 at some point. But ideally, I want to see something fresh pop up tomorrow. Looks like the overall market kind of is ripping in the after hours here. Let's see here. So SPY back up to 500 off of the low of 94. Decent bounce, going back up to all-time highs. But still, I think the market's still somewhat warm. I think we could see some more opportunity for the rest of the week. Let's see, MOTS didn't hold up. So really the only stock that held up was VTYX. But looks to be, I'm probably not going to trade. Ideally, I don't want to trade it for a second day. Sometimes on the larger float stocks, you do get the multi-day continuation. but preferably for me, I like to see the first. I trade much better on first green days rather than multi-days or the consecutive green days. We can take a look at my stats for today and then wrap it up. Alrighty, here. Average position cost 2,430, so definitely a lot bigger than the average, which is good. That means I'm pushing myself a little bit more than usual in the past couple of weeks. So position size, a little bit bigger. Let's say about 20% bigger than I did last week, which is good. Largest win, $320. Largest loss, only $80. So keeping those losses real tight is key. Average win is double my average, more than double my average loss, which is great. And my accuracy is right around 50-50. So 50-50 accuracy is fine with me. With this hyper scalping strategy, you're going to have lots of losses, but the key is if you can keep those losses tight, keep those losses small, you'll be able to come out ahead in the long run. But don't expect to have every trade to be a winner. It's just not going to happen. It's just not realistic. Risk management is the key for staying profitable for sure. Let's see here. We could take a look at the running P&L. It's pretty consistent today. Yeah, so overall pretty consistent. I didn't give back a whole lot of gains. My high looks like it was 1,134, and then I gave back close to 200 off the top, and then started to make some back. But which isn't too bad. If I can, I like to, once I hit like a high in the P&L, I don't like to give back more than 50%. If I give back more than 50%, that's usually a time to walk away, because usually I give back, that's just too much. And then I start to get a little bit frustrated. So, giving back 10% or 20% is fine, and I'll probably keep trading. But if I ever get back 50%, that's usually when I call it and just come back the next day. Because it's usually not worth to keep trading, because a lot of the times, after you get back 50%, it's usually a red flag, and you're actually probably going to go back to flat or even red, and you can really spiral out of control. So, keeping those losses tight, especially after you already have a decent green day, not giving back too much off the highs, responsibly trading from there, not giving back more than 50%. A lot of times you'll see you can double your profit, or add another 50% on if you trade midday. Sometimes you get those midday movers, but it's always important to keep a nice mental backstop. Let's say I'm up $1,000 in the morning, and I want to keep trading midday. Okay, let's say, all right, I'll risk $200. I'll risk me being up $800. I'll risk $200 off the top to trade midday, and if I can, build another cushion, say get myself up 1,100 or 1,200, then now I'm moving in the right direction, and I can start to trade a little bit bigger, keeping that $800 mental backstop. And if I ever cross over, let's say $800 down into giving back profits, then just wrap it up and coming back, unless it's a really hot market. But right now I wouldn't say it's delusionally hot. It's a warm market, but it's not delusionally hot. I'll take a day like this and not really push it too much. CPOP did pop up later in the day, but I'm looking at it now. It wasn't really anything special. My best idea was just come back tomorrow. The next best opportunities are likely usually if you're a pre-market trader, it'll be pre-market. Recently we've been having a lot of opportunity pre-market, and also at the open between 9:30 and 10:30 or 9:30 and 11. Usually that's where we usually get the bulk of our great opportunities. So if you can capitalize in that period of time, and then walk away and come back the next day, it's usually the best, unless it's a really hot market, but that's just not where we're at right now. But that's really it. Nothing much else to go over. We had EBS as well. EBS was interesting, however, it was really tough to trade. This one was real choppy, sort of that grindy action. I never really do too well on this grindy action. It's not very clean. I was able to pull about $70 or so out of EBS. It was a mixture between kind of going short and also going long. I was kind of scalping short and long for some reason on small share size, at least going short small share size. I was able to pull out $70, which is pretty decent on this type of action. It's not really my favorites. Yeah. The level 2 was not clean on this either. It was very like, in an instant, it would just be down 10 cents on like a $3 stock, and that's, or a $2.50 stock, instantly down 10 cents. You know, bids flashing down 5-10 cents. It was just ridiculous. So this one was tough to trade, but I was able to kind of work with it and get some small green. So hopefully you guys got green today. It was a little bit tough one. If you guys, got on the bandwagon on VTYX, this one was the cleanest one of the day, but it was really hard to spot because it wasn't on my scanner. It was not on my scanner pre-market. I did not even review it. It wasn't on my scanner, and this is just one of those things where, if you can see it start popping up, you got to be able to adapt and pivot to a different stock that you did not expect coming. And if you can do that and adapt to the opportunity, you could have definitely made a killing. And I saw this opportunity right at 932, started trading it right at 932, and from 440 I traded all the way up to $7.50 and made $1,000. So being able to spot those opportunities, even though previously your scanner, your watch list was just completely wrong for the day, is going to be key as well. So hopefully you guys enjoyed this recap. Hit that thumbs up button for me. If you're new, hit that subscribe button. I'll catch you guys tomorrow. Peace.